Hi, my name is SYAFINI binti Abdullah.
Hi, my name is HANIM SYAZWANI.
My name is AUNI binti Muhammad KAMAL.
Assalamualaikum. My name is Nur Fatih Izzati Mahmud.
My name is FATIN UMMIRA binti KHALIN.
Okay, our group will present the question 6, which explain about the rules and types of auditing. Okay, first and foremost, the role of auditors are very important in ensuring the shareholders' interest is very well protected, and the company management be managed or act within reason. Besides that, the shareholders also primarily depend on the good faith and efficiency of the company auditors' actions of operation is being verified. The auditors they need to provide unbiased and objective assessment of whether the public resources are being managed effectively and efficiently to achieve certain results by helping the government installing confidence, integrity and accountability among the citizens and the stakeholders. Besides, in order for them to achieve the goal-oriented, there are several types and rules that need to fulfill by them.
The first type of audit is financial audit. Financial audit involves auditing of the process of accounting, recording, and also reporting of financial transactions. The objective of financial audit is to improve the confidence level of the main user in a financial statement. In financial audit, the agencies are expected to follow the correct format of accounting and recording. Financial statements by public companies are typically available for a large number of users and usually more complex. Apart from examining the accuracy of financial statement, financial audit also involves inspecting the agency compliance against stipulated budget, which also referred as budget execution audit.
Okay, then we will proceed with another types of auditing, which is management auditing, or also known as performance auditing. Okay, under these types of auditing, actually this is to determine the level of accurateness and fairness in our financial statements. Okay, as according to businessdictionary.com, there are few objectives of management audit, which are to create the current degree of effectiveness, to recommend the improvement towards our financial management performance, and to state it or set down the desired standards for a positive future performance. Okay, for instance, an excellent succession planning is one of the good examples as to illustrate what is the management audit is all about. Okay, the plan that may enhance your financial management performance as it can make it more effective and worthy. Okay, that's all for management audit.
The next type of auditing is compliant auditing. Compliant auditing is the audit undertaken to check whether a firm is following the terms of an agreement or the rule and regulation applicable to an activity or practice prescribed by an external agency or authority. If rules are violated, the auditor needs to know cost recommend ways to prevent future deviation. Through corporate bylaws, policies, plans, and procedure, the rules being tested can be those created by the organization by itself and can be thus imposed on the organization through external laws and regulation, or can be those external standards that the organization has chosen to follow. For example, ISO 9000 quality management system. Besides that, compliant auditors must have the skill to research issues effectively using authoritative materials, understand how to apply the knowledge gained to the circumstances being tested, and be able to explain to the organization what compliance means in day-to-day operation. It is very important aspect of audit in Malaysia as to ensure the standard of management and accountability across agencies.
So first, there are several roles of auditing that give it significant impact towards our public department and sectors as a whole. So these may include first, in helping the public sector's organization to attain accountability and integrity. Second, is to advancing and enhancing operation. The third is to instill confidence among citizens and stakeholders. Auditing is a keystone of a good public sector governance as it serves a neutral assessment to see if whether the public resources are being administered responsibly and adequately by the government's department in order to accomplish the desired or planned result. Okay, so on the first point, the government may have more check and balance in their accounting system, as audit involves a process in which the government may need to maintain openness towards the citizen. That means a transparency process, and the government officials must always do their work in accordance with honesty, integrity, and ethically. So other than that, auditing should be independent from those it is required to audit, so it can both execute it and to be recognized to carry out its work without intervention. So this will lead to the second point, which audit can be a good stepping stone for the government in advancing and enhancing the operation. So this is because it will provide a good financial and performance report, since it enables the auditor to identify problems, respond and take corrective measures over defective financial account. So on the last point, as being mentioned earlier, the roles of audit can also instill confidence among the citizen and stakeholders. With all measures that the audit officer and the public organization involved have taken when conduct audit activity, the people and stakeholder involved may find the government is being honest, and this will then build confidence building towards the government. The transparency element in auditing process will cause the people to gain trust, and directly this will provide the good values to be practiced too by the people, not only the government.
Okay, in conclusion, there are many roles and types that need to be fulfilled by the auditors, which are differ from each other. The role of the auditors, like financial audits, compliance audit, and management audit, are very important in protecting the company management and also the interest of the stakeholders. Without their roles, the organization would have difficulty in ensuring the stability of the company itself.